You guys have to understand, whenever you are shopping for a home loan, you need to enter into the transaction knowing a couple of things, because you're doing it wrong.
I mean, it worked last time.
It's not hard, so listen up.
I'm listening.
Thing number one, you need to be able to clearly and concisely articulate what's important to you.
No one's ever asked me that before.
The first thing I'm going to say is, what is your desired outcome? What do you want to be true about this transaction when we're all done? Does that mean that you're concerned about your payment? Are you concerned about the rate? Are you concerned about your cash to close? What are you concerned about the most? I'm not responsible for making the mortgage payment, and I'm not responsible for writing the check at the end of the transaction. What I am discovering is that a lot of y'all are entering the transaction and you have this laundry list of things that you want as a desired outcome, and it is not possible to meet every single thing on the list. And so you have to be able to clearly, concisely articulate what is the priority of the things on the list. So thing number one, if you say to me, Joy, I want the lowest rate. Joy, I want the best rate. Joy, give me the best deal. Lowest, best, those aren't numbers. Those are subjective terms that need to be defined by you, not by me. To say, I want the best deal, give me your best deal. I don't know what best means to you. Best could mean a myriad of things. Best could be, you want a 10-year loan? The interest rate is better on that. You want to put 20% down? There's no mortgage insurance. And to some people, no mortgage insurance is a lower payment, which is better than mortgage insurance with a higher payment. You have to be able to articulate what does best mean to you and your family. It sounds something like this. Joy, our budget is blank. We want a payment between $2,200 and $2,700. 27 is like our absolute cutoff. That's just gonna be too much to manage. Okay, cool. Understood. Beside the payment, so if you are rate driven, your rate directly impacts your payment. If you just gotta have 6%, 5%, you have to be prepared to make an exchange.
Like trade agreements.
You have to be prepared to say, okay, in order to get this rate or this payment, I might need to pay a little bit more money at closing. You're not gonna pay a little bit of nothing and have this low payment so you can feel like you won. It doesn't work like that. I am not the loan officer for you to make you feel good. I'm the loan officer that's gonna be here to get you a loan and to prepare you for home ownership. At this point, I'm just convinced that y'all wanna be lied to. It gotta be. Like, I'm convinced people like to be lied to. And I ain't your girl to be lying to you and nobody else about your home loan. You can't have everything on your list, so you gotta be able to identify what's the most important thing on your list. Is it your interest rate? Is it your payment? Is it your cash to close? Then, once we've established that, the loan officer will take that information and they are going to build out, they're going to structure what they deem as something that is going to be comparable to what your desired outcome is. You will take that, you're gonna review it, you're gonna say, oh, I like this, I don't like that. We can tweak it a little bit, lock the loan, and we're on our merry way. Whenever you have this loan estimate or closing cost worksheet and you want to shop around, here is where y'all are falling down on the job. You say, hey, give me your best deal. What's happening is you're taking this piece of paper that you don't know how to read and you're saying to the next person, hey, can you beat this? You don't even know what you're asking them to beat. Here are the 3 questions that you need to be able to compare. 1, what is your interest rate? So you want to start with a rate from somebody, somewhere that you feel is comfortable for you and your family because it meets the payment or it falls in the payment range that you would like. Because you don't want to get down into the details of things and start saying, oh, well, this is $13 higher or $16 lower. If you say that it's, if you feel that your payment range is between $2,200 and $2,700 and it falls in there and you're like, okay, I could swing this, figure out what is the rate. And then you want to go to 2 other lenders max. Not 6, not 7, not 10.
Is that a lot?
That's a lot.
That will give you a total of 3 people that you are talking to on the same day. Don't start this on Monday and then be talking to somebody else on Friday. They say yesterday's price is not today's price. We mean it. So what is the rate? So in this case, let's just, for the sake of conversation, let's pretend we're comparing a 6% rate. You then want to look at 2 other pieces of information. So let's pretend that you go to lender A and the interest rate is 6%, and you go to lender B and you say, hey, show me your fees are for 6%. You need to know, what is their lender fee? The lender fee is how much does this bank or lender charge me to do the loan. That has nothing to do with the rate. That number can go anywhere from like $0 all the way up to sometimes about 1%. The second number that you have to compare is the points, the discount points. How much does this interest rate cost me? That is going to vary, again, between the days of the week, the time of day, the lender. It's a whole lot of things that go in there. That is all you need to know. Don't get into the weeds of, oh, well, their credit report fee, and oh, well, what about this? And oh, well, they're telling me my homeowner's insurance is gonna be there. That ain't none of our business. That is not our business. Whoever you choose to use for your homeowner's insurance, Geico, State Farm, that is not our business. All of that is gonna shake out whenever those numbers are reported back to us. The only thing that you can do when you are shopping for a home loan is compare the same interest rate to the lender fees and the discount points. Anything outside of that, you can't compare, because it's literally not the lender's business. Literally. We don't employ the title and attorneys. Those are separate. We're not able to give special discounts because we like you on your credit report. We can't tell State Farm to give you a lower insurance. We definitely can't tell the government to give you a better tax rate. All of that information is estimated. That's why it's called a loan estimate. So you kind of gotta take it with a grain of salt. But when you have a loan estimate, the things that the lender says, hey, this is the type of loan, this is the interest rate, this is the lender fee, this is the discount points. That's what we are extending to you. How long is it good for? It is good for as long as it takes for the ink to dry. When we click the button, it is no longer good. If the rate is still that the next day and you have not locked it and the fees have changed, then so be it. If the rate and things change and you have locked it, then excellent. You don't have to worry about the rates and things changing. 3 things, 3 people. Interest rate, lender fee, and discount points. Compared to 3 people. That's it. Make a decision and move on. Because what happens is when you get in 4, 5, 6, 7, 8 estimates,
You got to stop, man.
you're comparing different times, different products. Everything needs to be the same. Everything needs to be uniform. And for what it's worth, you need to be working with someone that you trust, someone that you have established a rapport with. If you've established a rapport with someone and you look them up and, you know, like me, I'm an accredited mortgage professional. If I'm providing, you know, the information on a loan estimate, the loan estimate is binding. It means that it's not something that can be manipulated. It requires us to disclose all the fees, all the costs that there are. So we can't come back and play gotcha. If you've done those things, and you still don't trust what that individual is saying, then you don't need to be working with that person. Because it's so regulated, the things that we do more often than not are going to be recorded phone conversations, especially when you're dealing with a bank, and whatever's on the loan estimate. Now, like I said, if you haven't locked it and it expires, well, then that's a you problem. But if it hasn't, then this is what it is. This is where we are. This is what we told you. 3 things, 3 people. What is the rate? Take the rate, ask a couple other people, what do they cost for that same exact rate? Are you doing this on the same exact day? What is their lender fee? And how much it costs to get that rate. And then you lock it and then you move on with life. It's not super, super hard, but as we enter this climate of YouTube, of Google, of Instagram, TikTok. Everybody wants to be a loan officer now, and I'm finding that y'all trying, bless your hearts. But I hope this is helpful for you. We want to make sure that we are making intelligent decisions that are meeting the goals that you set forth up front at the beginning of the process, when you said, hey, the most important thing to me is my payment is the lowest, or the most important thing for me is, my cash to close has to be, shouldn't be no more than X. Once you start introducing too many cooks in the kitchen, it starts getting convoluted. And as a novice, and I say this respectfully, you don't know what you're doing, you just start getting confused. You don't, and it gets worse and worse and worse, and you spinning out, and you just end up getting anything because you're frustrated, and you've now put yourself in a worse situation than you were at the beginning of the transaction. Y'all, I hope this was helpful. If it was, give me a thumbs up. Also, if you're new here, make sure you subscribe. Tell me in the comments below if you found this information to be helpful. If you got questions, I'm happy to meet you down there and chat with you. So I'll see y'all next time. Have a great day.